Hello retail traders, this is Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. I'm going to talk about the 9 EMA. I've seen a lot of videos today, or just turned on YouTube and everybody wants to talk about the 9. So I want to talk about the 9 the way I use it, which I think's a lot safer and better way to trade it. So we're going to use the chart coin. The 9 EMA is a moving average indicator that calculates the average price of an asset over the past 9 periods. It is a popular indicator that a lot of traders use, and we're going to talk about it with coin. Coin had a breakout first thing in the morning. Now I like to use 3 different time frames. It depends on what kind of trader you are and how you trade. I like to get in and out of these stocks pretty fast. So I'm using the 9 to try to get in at my earliest time set. And I'm going to start doing something a little bit different. I usually just stick with the 1 minute and run with it all day long. But we're going to talk about an example right here on the 1 minute. Ready to open. Right out of the gate. The chart that I'm using is a TTM trend chart with an automatic Fibonacci setup on it. So whatever time frame I have this in, basically it'll show me the fibs, which I'm not going to use in this here strategy. But right at the open, 3 minutes into the day, I seen a hammer. So that catches my attention. A hammer is a reversal pattern. And like I said, I'm looking for patterns, and I'm looking at the moving average. And this one here, I just got one on here, and that's the 9. I usually have about 5 or 6 different moving averages on here for entries and exits. So we look at the hammer, we notice it right out of the gate. That caught my eye. Then we had a big engulfing candle right after that hammer, and then it started gaining respect above the 9. So once I saw this doji right here, I said, that might be a good entry. So we take the trade, and then we had the breakout, and she runs on up, still respecting that 9. Still respecting that 9. So you ask yourself, once we broke below the 9, should I go ahead and get out of this trade, or should I hold on to it? So I decided to go ahead and stick with it, and we get a tweezer bottom. And that tweezer bottom breaks out above the 9 and pulls back again. Now, when I start feeling bearish is when the body of the candle is below the 9. When that body gets below that 9 right there, that's when I start to put my finger on the mouse for an exit idea. And then we created a double bottom. So once we had a tweezer bottom right here, which kept me in the trade. And then we had a double bottom, and we're still respecting that 9 because that body of that candle is not below that 9 yet. Then finally, we get up here to a 1, 2, 3. Now I'm asking myself, okay, we're at a critical stage right here. Should I go ahead and stay in that trade or not? If it respects that 9, and I've got the 1, 2, 3 going on, this is another strategy that keeps me in the trade for a triple bottom. 1, 2, 3, stay in the trade. The wick touches that line barely, and she runs up, she breaks out, and she still gains respect to that 9, and then finally I say, okay, I'm going to cut it right here. I'm going to get out of the trade. Then she disrespects the 9, falls back and runs right back into that trend line, holds support. So you got to watch all kinds of different things that are going on. Boom, another trade. We got a big hammer right here. Big hammer is a reversal candlestick pattern, and she breaks out and runs up, and then you get out of the trade once you start seeing these dojis, and she breaks below the 9. So that's trade number 2. Trade number 3. This is an interesting pattern right here. So I'm counting to 3. 1, 2, 3. I'm always using 1, 2, 3. So we draw in the pattern. We're below the 9, so we're bearish. All these bodies are starting to be below the 9, and we've developed what I call a snake. So we're going to draw this channel in. And we count to 3. This counting to 3 And if it doesn't work, you know it doesn't work. But there we go. We count to 3 and she breaks out of the channel. This is a triple top breakout. There's another pattern in here that really gets me excited. Can you see what it is? It's called inverse head and shoulders. So we're below the 9, we're below the 9 and we're bearish. And then all of a sudden we create a pattern. This is called an inverse head and shoulders. This is your left shoulder. This is your right shoulder. She breaks out of the channel with your 1, 2, 3, pulls back again, hits it the second time, the shoulder, the right shoulder. So you got one hit right here, that's the left. You got the head, and then you got the right shoulder right here. She comes back and touches the right shoulder, and again she touches the right shoulder. So the second time it breaks out of the channel and pulls back and retests. They always retest. She retested that right shoulder, and that's the time to take the trade and then run it on up. If you have the patience to wait for the second touch on that right shoulder, then you know that you got your confirmation once you broke out of the channel to take that trade and run it all the way up until it starts showing some disrespect. And then you get out of the trade. So this is a real nice strategy to use. It's called the inverse head and shoulders. That's in the snake with a 1, 2, 3 breakout. Boom. Inverse head and shoulders. It's one of my favorite patterns in the year of 2023. Already off to a bad start. Boom, there we got it. Inverse head and shoulders. Same thing right here. You got another one, inverse head and shoulders. You got another one right here, inverse head and shoulders. As long as it stays above that 9, you're still in the trade. Once it breaks down below it, you get out. Take your profits. Same thing right here. Same kind of trend. Draw your snake out. You got a 1, 2, 3 dip. You got an inverse head and shoulder right here on the left side. Move that one out of the way. You got your left shoulder, you got your head, and you got your right shoulder, and then the retest. But in this case, we know that we had a 1, 2, 3 breakout of this channel, and we're still showing disrespect of the 9. And then all of a sudden, we break out above the 9 and we break out of that channel. So that's got our attention now. We've noticed that we have an inverse head and shoulders. We noticed that we broke out and pulled back and retested. Broke out, and then the second time, boom. Get out at the double top. It's all about chart patterns, moving averages, and being in the now. So there's your double top exit. That's time to get out of that trade. Once it broke down below that 9, but me, I would have took it, I would have got out at the double top. That's a no-brainer right there. So that's using the 1 minute. Now for some of you other traders that don't like to use the 1 minute, you could always use the 3. Minute would have kept you in this trade probably a lot longer until you got up to here. So you would have took it maybe on this engulfing candle. It's more of a simpler. I mean, I've been at this for 20 years, so I like using that 1 minute. But it's a simpler strategy. It's more simple on your brain. You could stay in this trade all the way up. You're seeing a little bit of pullback here, but it's a double bottom. You want to draw that trend line in here. This is the 5 minute. Pay real close attention to this. So you're staying in the trade, and you've been 5, 10, 15, 20. I mean, you're in here for almost 45 minutes. She pulls back and gains respect, and you got a big hammer right here. And that's a double bottom. Boom. Start showing respect above the 9, still respecting it. Then you get out of the trade at the double top. A little bit what I was talking about earlier. So she pulls back, and then you have a triple bottom. You decide to go ahead and jump in that triple bottom off this hammer. She runs up and respects it. Another inverse head and shoulders up here at the top. So now you got a triple top up here. Now come back and touched the 9, then came back up, pulled back, and then came up for the third time. And then you get out of the trade once that started disrespecting it. Or you got out of the trade up here at the double top. You started feeling a little choosy, you know. You've been in this trade for 3 minutes, so what? I said 5 earlier, but I'm talking 3. 1, 2, 3, 4, 15 minutes. And an average scalp is no longer than 30. As long as you stay above that 9, you're still respectful of the trade. If not, you want to go ahead and get out and cut and take what profit you have. It depends on the time of the day. Like I said, the first part of the day is the best part to really start making money. Then you consolidate and you start getting a little bearish and everything starts to get a little bit weaker, and you could short it maybe, who knows. So use the 5 minute. Which is a much easier pattern to work with. Right out of the gate, you're about 10 minutes into it and you decide to go ahead and take the trade on this engulfing candle. Candle might have come up, come down a few times in that 5 minute period, and buy it off that 9 because it still respects that 9. You had this big hammer right at open, big spinning top right here, or shooting star, long leg doji. Gains respect on the 9 all the way up until finally it starts to lose respect. But you're moving up, you're above the 9, you got a double bottom, you decide to stay in the trade, then you get a double top and you decide to exit the trade. Comes back to a triple bottom, then you realize, okay, I've got a 1, 2, 3 here on the 5 minute, I'm going to stay in the trade and run it on up, then exit at the triple top. As long as you're respecting that 9, but the chart pattern here was a triple bottom with this big huge hammer. So that's a bull flag right there. That's a bull flag if I ever saw one. Then that doji right behind it, boom. So I'm staying above the 9. And then finally lose respect. Then you have another pattern right here. Big long leg doji with 3 black crows. So that's different ways of training the 9 EMA. Remember, it's just a simple moving average. It's not a simple moving average. It's a fast moving average that reacts to the last 9 periods. And you can do this on a lot of trades. Let's look at the SPY. SPY on Friday. Right out of the gate, SPY, you have a tweezer bottom with a hammer. Run it all the way up until you disrespect it. This is the 1 minute time frame, then you get out of the trade. So your entry was a tweezer bottom. With 2 hammers. Stay above the 9 and then get out of the trade once it disrespects the 9 EMA. Exit idea. Maybe then you notice again a tweezer bottom. We break above the 9. Then you got that big ugly candle right there. You don't want to stay in that, because that could be a downfall. So this is interesting right here. You got a snake, break out above the 9, and this turns into a wedge. So you draw in this is the 1 minute. So you draw that in. 1, 2, 3 bodies. She breaks out, pulls back. Then you got you a wedge. So once that wedge breaks out of that wedge, you jump in the trade off the 9, run it on up, scalp that thing in about 7 minutes. Then once it starts to drop, that red candle shows up. This is on the TTM trend. You start to know that this thing's getting a little bit bearish. You can tell down here by the trend itself, the squeeze, that it's starting to show blue and that the sellers are coming in. The buyers are in here and the sellers are leaving. I mean, buying in. The sellers they're selling. The buyers are selling. Then it comes back and respects that support level off that there wedge and bounces up again. Plus, that almost looks like an inverse head and shoulders right there. So you have another opportunity right here. Disrespect shows a little bit of respect, but not a conviction of it yet. But then you start to see something right here where it breaks out of that 9. And it's respecting that 9 all the way up. Then you decide to go ahead and get out of the trade once you hit a double top up here. Now a lot of people that trade just using the 9 are have a little sticky finger and they're not looking at the patterns. The patterns will keep you in the trade. Once you break out of the pattern, like the wedge right here, this is called a squeeze. So you're getting in at the possible lowest part of the trade right here. Once you break out, it catches your eye. And then boom, you exit up here at the double top. Once it sees the double top, then you go ahead and get out of that trade. So that's snake, breakout, pull back. And then you get into building of a wedge. Then when it breaks out of the wedge, you got a 7 minute scalp and you're out of that trade. Using a 5 minute, different time frames will put you in a different position, different idea. So we're going to clear this up. Right out of the gate, you have 3 white soldiers. That's usually an extension. A lot of cases, but it wasn't Friday. It went ahead and pulled back to that bottom soldier again. And then you had a triple bottom. So you had your 3 white soldiers. And then it came back and it created a wedge. Then once it broke out of that wedge, she had the breakout. So you had your 1, 2, 3 right here to get out of that trade, your triple top. Then she breaks down again, disrespects the 9, Then you have a big long leg doji right here for an idea to get in this trade maybe after these 3 black crows. Now this is on the 5 minute. So you recognize the pattern, which is the 3 black crows. You're under the 9. Then you got a doji right here, a long leg doji with 3 tweezer bottoms. 15 minutes went by. And to gain respect, this is tweezer bottom here, which is telling me with that doji that we're going to have a nice little bounce. So 25 minutes later, 30 minutes later, 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60 minutes, hour later, she loses respect. But by this time, you're too close into the day and you want to get out of this trade because things start falling apart or they start bouncing real big. So you decide to go ahead and exit the idea once you see this double top. Now that was off 3 black crows. I talk about this chart pattern a lot. We're disrespecting the 9, and once we respect it, Jimmy got in it down here because we had a tweezer bottom with a long leg doji, and I know that's a buy signal. I mean, once I see this doji here, I'm really excited. I want to take that trade. But not always. Depends on market conditions. So I hope this wasn't too long. I just wanted to show you different ways of using the 9. I like to use it with patterns. I like to use it as respect as long as the bodies stay above the 9. Once they go below the 9, then I'll get out, take my profit. I like to look for patterns. We got, double bottom, boom. Once we broke out of this wedge, we had to double bottom. We broke out of the wedge, stayed above the 9. There's 35, 40 minute scalp. 3 black crows. 15 minutes had gone by with a tweezer bottom and a long leg doji. Boom. Run it all the way up. Then we started getting into the day, and you want to get out of that trade. So that's it. We'll catch you tomorrow. Wish everybody a happy 2024 and have a great day. Sneaky Snake Trading Strategy, where I talk about moving averages, chart patterns, and being in the now.